Since January 5th, Bitcoin has been trading in a band between 45,000 on the upside and 35,000 on the downside. Of course, this is a pretty wide band, but if you consider the wildly volatile path that Bitcoin has traveled to get here, it starts to look pretty tame. Now, could this be the beginning of a long-awaited stabilization of Bitcoin? It's probably a bit early to give out any awards here, but there are a couple of things that seem to be causing the push-pull that stabilized Bitcoin. One, the dollar's recent strength amid geopolitical risk. Two, the Fed's continued plan to hike interest rates and to sunset their bond buying program. And three, continued talk of more government regulation. The combination of these things could be what's capping Bitcoin's upside. On the other hand, we have China and Japan both adding stimulus in the face of an economic slowdown and several headlines about governments seizing bank assets. Now, Bitcoin faithful are going to argue that the key component of crypto is its ability to transfer and store wealth outside the banking system. Now, if a trader believes that the Bitcoin price could resolve itself to the upside, an example of expressing that thesis could be to buy the CME Group March Micro Bitcoin futures contract at 41,000 and target the December highs of 52,700. Now, stop for this trade could be placed below the support, call it at 34,800. This trade could profit 1,170 if you reach your target and risk 620 if you're stopped out at your level. Now, if a trader believes that Bitcoin could suffer weakness, perhaps because of domestic rates and the dollar going higher, one could express that view by selling the March Micro Bitcoin futures contract at 41,000 and target a return to the summer of 2021 lows of 30,000. A stop for this trade could be placed just above the band at 46,000. This trade could make $1,100 if your target is reached and risks $500 if you're stopped out at your level.